Good afternoon, everybody. This is Matador from freetradingvideos.com. It's still Friday. We're looking interesting here after a pretty good sized run up on some news. If you'll remember what happened here, the consumer confidence level rose in early May to its strongest level since September, failure of Lehman Brothers. But on the heels of that, you can see again what happened with GM. So they are going to do this. They're going to get rid of their 1,100 dealers. Chrysler announced it's going to drop 789 of theirs. So that scares people a good bit. And then we come back. The interesting news is, of course, that we ran up right to our logical place of resistance at $90, like we talked about. And now we're finding a little bit of support here at the morning gap down open. So you can see this. This also corresponds, if you look, to a support level on the 15-minute chart, and these are the lows over yesterday. All right, so we're kind of watching this area very, very closely. The 88.50, I would put that number there. Fine-tune it, 88.65, and this is a very, very nice head and shoulders pattern over here, right into a declining 100 MA, right into a still yet unfilled gap with just one little peak higher. So watch again how the market bounces off this support, which is doing. We need to mark the next swing high we see and mark that Fibonacci and do retracement on him. So we'll do that. We'll see how far of a bounce we get. If not, it may be more of a low base, and then I would expect some kind of further drawdown. The one thing that's not matching, however, right now is the TRINs. The trend itself is pretty bearish. A lot of volume flowing into stocks and then decline, but the trend Q, you'll notice, is staying steady in the 0.58 range. That's very, very bullish. So it's almost exactly opposite. Again, the tiebreaker, the VIX, had been low for a good part of the day and selling off, but then a pop here toward the where we are now. So right back up into support. If it was looking at the chart itself, this S&P 500, for instance, and now it's resistance on the VIX as it works its way back higher. There's a little pop even as we speak. If this breaks out and heads higher, that'll probably correspond with a sell-off in the market, and we'll have to watch that very closely. If not, then sometimes that can precede a sell-off in the market. So good stuff. Always pay attention to those broad market internals. They're worth a lot. So very good. Stay tuned. Like I said, watch out for that news. Again, it's very, very powerful to watch these resistance areas, not trade long into multi-bar rallies into resistance and round numbers like this, especially when they correspond with unfilled gaps. So pretty good. We know what we're fighting. We know what we're trying to hold up in, and we'll see if we can do it. So hang in there, everybody, and I'll be talking to you at the close.